Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, April 22nd at about 3:45 p.m. Eastern. Well, the stock market has been stuck on a steady decline today. It's gone down dramatically, largely an extension of yesterday's action. The S&P 500, Dow Jones, and NASDAQ Composite are each down a little over more than about 1.5%. All 11 S&P sectors are trading lower. Value and growth stocks are falling together, and declining issues are outnumbering advancing issues by a 5-to-1 margin at the New York Stock Exchange. That's pretty steep. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index, and what a day it has been. Now, when I captured this chart today, the SPY was trading at $429.95. That's about $42.99 on the S&P 500 itself. Now, the S&P or SPY, either one, they are both trading about 9% below the SPY's last all-time closing high, which was back up here on January 3rd at about $477.71. Now, we know we've been following the SPY, of course, down from the move it made from that high at 477.71. It started in a pretty swift downtrend. We can even see a little head and shoulders formation here now that we look at it. And at any rate, that fell through pretty neatly. The SPY fell dramatically. Made a low in January at about 421. It consolidated here, then marched back up through the 200-day moving average, the black line, through the 20-day, the red line, almost back up to its 50-day moving average, which is the green line. So went back up to about 458, then rolled over again. Now we're starting to see the definition of a downtrend here, which is lower highs and lower lows. So it got all the way down here. It actually gapped down one morning. It gapped down one morning and made a low at 410, which is about 4,100 on the S&P. You see this gap down here? Then it rallied from there, and everybody said, just kidding, no problem. Moved back up here to this prior consolidation point, back under the 50-day moving average, then rolled over again. But here it made a higher low, and everybody said, oh, good. Well, if it made a higher low here at about 415, then that must be everything's okay. And indeed, it looked pretty nice until the rally, and the rally went up hard and fast here. Some of this was undoubtedly short covering. Now, back here it was 458. It made it up to 462 here before it started falling again. And of course, we're seeing more and more signs of inflation here. We've got some pretty strong geopolitical problems with the Ukraine war. There's a lot going on right now. So the SPY came back here, consolidated, bounced up a bit, gapped open yesterday into the 200-day moving average, and then fell sharply. As you can see, closed at its lows yesterday, gapped down slightly this morning, and again now as we're looking at this chart, the SPY is trading at $429.95. So we've got to ask, in the coming week, we're still in earnings season, does the SPY head lower here? We do have support here, potential support at, I drew a trend line here, a short-term trend line. It has potential support here. Of course, it's already down below. It's down below the green line, the 50-day moving average, which is not particularly a positive sign. It's below the, of course, this resistance here. We're down below the 200-day and the 20-day trend line, moving average, down below the 50-day moving average, and now it's kind of sitting on this short-term trend line today at, again, 429.95. So in the coming week, will support hold here if it does make it down to 415. Fingers crossed it doesn't, but if it does, will that support hold? So this is looking pretty angry at the moment. And we definitely need 410. That's the line in the sand that we have in here for the SPY is 410. So please stay tuned next week. Please don't jump into any trades immediately unless it's a short-term trade, and more especially if you have, make sure you put in a protective stop. And this market is a little nuts right now. And we need to be wise, and sometimes the best place to be is on the sidelines. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this represents the NASDAQ 100, very powerful index, major index in the market. And it holds in it the top momentum stocks, the top tech stocks, the Apples, Amazons, Netflix, Facebook of the world. Getting tongue-tied here with all that. And now when I captured this chart today, the QQQ was trading at $328.48. Now it is trading 18% below its all-time closing high, which was back here in November 19th at 403. So please know that when a stock or an index or whatever it is trading at 20% below its last all-time closing high, that means it is in bearish territory. So we're not there yet. We're just on the edge of bearish territory here at 18% below the last all-time high. So we know that after its start in January, it had a reasonably nice move here, and then it started falling dramatically again, like the S&P, quickly establishing a downtrend mode, lower lows, lower highs. We can draw trend lines here all over the place if we want to. It came down here pretty dramatically, like the SPY did in February. And on February 24th, it established a low when it opened down here. It gapped down and opened at 318. It rallied up immediately. When you see a move like that, it does usually include some short covering, because a lot of people would have been short this move who like to trade short. And it moved back up to the 20-day moving average, couldn't get over it, fell back down to 317. Actually, it came down, it went up here, then came back down, retested the lows at 317. Not a big deal, but certainly it didn't make a higher low, and then rallied back up. Everybody said this is a great time to buy tech stocks, moved through the 20-day moving average, which by now is inverted under the 50-day, moved through the 50-day. Everybody said tech stocks are it. This is wonderful. Came up, banged its head on the 200-day moving average, which can be a pretty potent line. It was before, it is again, and then fell back down. Consolidated here for a few days, and then, as you know, yesterday was a down day, and today was a down day, again with the Qs now trading at $428.48. So we do have, if it can turn around here, fingers crossed it does. It does have resistance up here at the 50-day moving average, and this price consolidation could offer some strong resistance. That's up around 346, so you might want to note that as a nearby resistance zone. Again, we're down here at 317 is our line in the sand. It is where it needs to stay above. And even if it's in bearish territory, it still needs to stay above this 317, 318 line to get some hope of moving back up again and at least some kind of a positive manner. So please keep your eye on the QQQ in the coming week, as I believe it will be a very, very powerful player. And yes, we're still in earnings season. Okay, our last chart today is one we haven't looked at in a little while. I'll explain to you why I'm looking at that. It's the Tukrium Wheat Fund, symbol WEAT. Now, wheat is one of the most important agricultural commodities, as you must know. It's used throughout the global economy as food. I didn't realize, and animal feed and fuel, didn't realize it's also used as starch, paper, particle board, and makes plastic. Now, why am I choosing wheat right now? Wheat is a commodity, and wheat commodities have a very low correlation with the broad market, and that's why I like to go to commodities in times like these in the stock market, when the stock market is obviously very annoyed. So please remember, this is a commodity. This is an ETF. It is considered by the IRS to be a commodity trade, and the IRS taxes gains differently for commodity trades than it does for a stock trade. So you or your accountant needs to know. It's not difficult, and it's actually beneficial, but you or your accountant needs to know how to deal with gains you make in commodity trades. Of course, the easiest way to trade commodity ETFs is in a tax advantage fund like an IRA. So we see here that for the whole, back into September of 2021, if we look left on the chart, we can see that wheat is just kind of marching along. Usually this fund is certainly not volatile. It just kind of walks along doing its seasonal moves here. We can say it's walking up above the 200-day moving average, not doing anything too exciting. However, then we can see the right thing for the wrong reasons for sure. When Putin began to threaten the Ukraine and attack the Ukraine, which is a very big wheat-producing country, wheat broke out on February 22nd at $8.14. It closed on the day and ran up to a March 4th high here at $12.75, which of course is a huge move. It stayed up here for a couple of days, then fell back down as traders took profits, came back down into this area here, kind of consolidated just atop and right around the 20-day moving average. So you can see it here in a range, kind of from 950 up to 1060. Then it rallied in the end of March going into April. It rallied up over the 20-day and has now been kind of hanging out here between 1060 and about 1140. So I've been watching wheat intently here. I am looking at the 50-day moving average, the green line coming up, and right now it is poised at $9.87. So in the coming week, if the market remains as volatile as it is, I'm going to be looking at wheat as long as, hear me on this, as long as it stays above the 50-day moving average, again, coming in at 987. If it stays above this line and continues to get supported by this consolidation here, consolidation prices, down here around 10 and higher, I will add a small position to my portfolio. Again, as long as it stays above the 50-day moving average, I will put in a stop at $9.45. That's just below this consolidation lows. If wheat starts higher, it can move above $11.30. If it can close above that, I will add more shares to my portfolio, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the WEAT in the coming week. And now, please know that this is the perfect time to check out my online training programs. These programs include our flagship trader training, 7 Steps to Successful Trading. We also, very popular is how to swing trade successfully, how to trade the trend for profits, 3 winning setups. That's always a good one. Bottom fishing down here, and we have many more. So please know these programs can help you increase your gains quickly and easily, and they are low priced. To see all of my online training programs, simply go to the link on this screen up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.